All right, let's get right into it. What does the future of the global stock market look like for 2026? Well, today, we're going to break down JP Morgan's huge Global Equity Outlook report. We're cutting through all the noise to give you the clear, actionable stuff you really need to know. Okay, so right off the bat, the big headline from JP Morgan is super positive. They're calling for double-digit gains for global stocks in 2026. And this isn't just some small bump, right? They're pointing to really strong corporate profits and a friendlier interest rate environment. We're talking about a seriously optimistic forecast here. But that leads to the big question, doesn't it? In a market this complex, what's the one thing, the single biggest force that's really driving all this optimism? It's not just a feeling in the air. There's a powerful engine behind this, and you, as an investor, really need to know what it is.
So here's how we're going to tackle that. We'll start with the big picture global outlook. Then we'll dive deep into the U.S., which is the heart of the action. After that, we'll look for opportunities outside the U.S., and finally, we'll wrap it all up with the key themes and takeaways you can actually use.
All right, Section 1. Let's get the answer right up front. Here's the most important thing to get. Yeah, the outlook is positive, but that growth isn't going to be spread around evenly. Not at all. There's a brand new, incredibly powerful dynamic at play, and it's creating a market that's, well, it's unlike anything we've really seen before.
And here it is. This is the answer. JP Morgan is calling this the AI supercycle. Think about that term. This isn't just a trend. They're calling it a supercycle. It's this massive wave of investment from companies and governments all scrambling to get a piece of AI. And it's not just about getting ahead. It's driven by what the report calls FOMO, the fear of becoming obsolete. Nobody wants to be left behind. So what does this mean for your money? Well, this supercycle is creating what's called a K-shaped economy. You know, like the letter K. One arm goes up, those are the winners, but the other arm goes down. Those are the losers. And AI is just making that split bigger and bigger. So it's never been more important to make sure your investments are on that upward sloping part of the K. Okay, so where is the absolute epicenter of all this change? Let's head over to the United States, which the report literally calls the AI engine for the entire world. So let's talk numbers. JP Morgan is putting a year-end 2026 price target of 7,500 on the S&P 500. Now, that is a big jump from where we are today. And get this, they even have an upside scenario where the index could blow past 8,000 if the Fed decides to cut rates even more. So there's a lot of potential here. And this slide just perfectly shows that K-shaped market we were talking about, but right inside the S&P 500. The report singles out this group they call the AI 30, the top 30 companies at the heart of this revolution. Just look at this split. These 30 companies make up 44% of the S&P's entire market cap, but they've delivered an incredible 96% earnings growth since 2022. The other 470 companies, just 9%. The difference is just wow. Look at these bars. The data is just staggering. This small handful of AI leaders, they're not just part of the market's growth. They pretty much are the growth. They're responsible for almost 60% of the S&P's total return, 64% of its earnings growth, and a whopping 87% of all the money being poured into R&D and new projects. It's just total dominance. But, and this is really important, while the US might be the engine, this AI momentum is not staying put. It's creating this ripple effect all over the world, opening up some really unique investment opportunities you won't want to miss. This table basically gives you a global scorecard, and it's super interesting. Check this out. The potential upside in several international markets is actually higher than in the US. You've got emerging markets with a potential 17% upside, and then look at South Korea, a massive 31% potential upside powered by an expected 37% explosion in earnings growth. Incredible. So why the optimism outside the US? Well, it's not the same story everywhere. Every region has its own specific catalyst. In Europe, it's fiscal stimulus and easier money. Over in Japan, big corporate reforms are finally forcing companies to invest their huge cash piles. And then you have places like Korea and Taiwan. They're basically the engine room for the entire AI hardware supply chain. They are absolutely critical. Okay, that's the big picture. But how do you actually invest in this? Let's get practical. Let's roll up our sleeves and look at the specific sectors and styles JP Morgan is pointing to. Inside the US, the playbook is really clear. They're going overweight, meaning you should have more exposure here on sectors right in the middle of the AI boom, like tech and communication services. But here's an interesting one, utilities. Why? Because all those new AI data centers need a mind-boggling amount of power. On the other side, they're underweight or less keen on sectors like energy and real estate, which could face some headwinds.
Now, what about investment style? In the US, the advice is to ride the wave, lean into momentum and quality growth stocks, which are, you guessed it, dominated by those big AI leaders. But if you're looking outside the US, especially in places like Europe and Japan, where things are a bit cheaper, a value approach might be the smarter play. It's a really nuanced global strategy.
And there's more. Beyond these big sectors, the report flags a few other really interesting themes. First, strategic resources. Things like rare earths and uranium that are crucial for AI, defense, and new energy tech. Second, deregulation, which could be a big boost for financials and housing. And of course, the big one, the ongoing AI and data center build-out. They call it the most compelling growth theme out there, period.
All right, let's pull all of this together. It's time to bring it all home. Think of this as your cheat sheet for 2026, the key numbers and the actionable playbook for you, the investor. So, what's the bottom line? It's these 5 steps. 1. The overall picture for global stocks is positive. Expect double-digit gains. 2. The AI supercycle is the engine driving everything, and it's centered in the US. 3. That AI 30 group is going to keep leading the way, creating that K-shaped market. 4. The opportunity is spreading. Look to Europe, Japan, and emerging markets. And 5. Your strategy should be quality growth in the US and value hunting internationally.
And this chart really drives the point home. Yeah, US earnings growth is looking great at around 16%, but it is not the only story. Look at this: Europe, Japan, emerging markets, all showing really healthy growth. And then, once again, South Korea is just in a league of its own, with a jaw-dropping 37% expected growth. It just shows how critical they are to this whole thing.
So at the end of the day, this entire massive report really boils down to one single critical question for you. The AI supercycle is here. It is creating a polarized world of clear winners and clear losers. The central challenge, the most important question for every investor in 2026 and for years to come is this: which side of that disruption will you be on?